What normally happens when the pound falls is that gilt prices go up. But this fall in the pound is having the opposite effect. With me to discuss why that is Adam Cole, Head of G10 FX Strategy at RBC Capital Markets. Adam, it's very unusual to have a fall in sterling and a fall in gilt prices, isn't it?
It is, yes. Typically when sterling is falling, it's because the yield on UK assets is falling, the price is rising. And there's a direct line of causality from lower yield to a lower currency. What we're seeing at the moment is that yields are rising, but the currency is falling.
First of all, let's just illustrate this difference in your first chart. There, if you can see right at the end, I mean, there's the general pattern of pound and gilt yields, but they're coming out of sync just right at the end, aren't they? And that's what you think, the last 2 weeks?
It's about a 2-week phenomenon when the moves have been not just unusual, but in outright opposite directions.
So why aren't you worried then?
So I think for the moment, there are a few factors that go beyond the UK's domestic deficits and political situation. The rising gilt yields isn't unusual in an international context.
Okay, and let's see our next chart, which reflects the relationship of the gilt sell-off and German bonds.
Yes. So if we look at UK bonds in spread terms relative to international markets, the blowout has been quite limited so far. Most of the upward pressure on gilt yields is simply because bond yields everywhere are rising.
And Adam, the other international comparison is with treasuries. Let's look at our third chart.
And if we look at sterling yields in that context versus the sterling dollar exchange rate, then although the blowout in yields is a little bit more significant, the relationship historically has been less tight. So you'd be less concerned there was some kind of structural break with the historical relationship between yields and the level of the currency.
And you also look at real yields. That's the big one that you worry about, isn't it?
So I think two things would concern me in the context of the funding of the UK deficits. One would be if gilts sold off more significantly relative to other markets. The other would be if the rising gilt yields was being driven by higher real yields rather than higher inflation expectations.
That's not happening at the moment.
As is at the moment, it's primarily inflation expectations that are rising.
And we saw inflation this morning having a big tick up. What's the impact of that?
So I think the market is building in effectively spillover from higher import prices into domestic prices. And the lower sterling goes, clearly the more import prices are likely to rise.
Okay, so let me get this right. If sterling stabilises or if we see a rally, that doesn't necessarily mean we'll be back to the normal pattern in gilts, does it?
Not necessarily, no. And there's still plenty of domestic political risk, of course, in the pipeline yet to materialise. Even if sterling stabilises here and gilts stabilise here, I don't think there's any reason to relax when we still have the inherent issue of a current account deficit of 5% of GDP that needs to be funded.
Yes. Now, and the other issue is whether the gilt market can be confident that Mark Carney, Governor of the Bank of England, really has the independence to decide where to move rates. Is it worried about that?
I don't think as yet that the market is starting to price in a credibility premium into UK assets. So no, I don't think that's really on the agenda. We've got shorter term and more immediate issues to deal with in our markets in the UK.
And quite simply, it's Brexit, it's political uncertainty, it's pushing the pound down, but in parallel, it's also causing problems with gilts.
It's causing problems in gilts, but no bigger than the problems that we're seeing in other bond markets internationally, and that's a critical qualification at the moment. If we start to see a combination of sterling weakness and significant gilt underperformance, particularly if that's driven by rising real yields, then I think we do have to start worrying that the UK is facing difficulties funding those two large deficits.
Just another thing to worry about. Adam Cole, thank you very much indeed.